hoping and thinking the shares will drop in value beyond 180 and they will be in the money with 10 put contracts, controlling 1,000 shares of GameStop for a fraction of the cost of shorting 1,000 GameStop. That's another reason why options are so popular. So there are a lot of speculators on both sides of this market all the time, always. Now, some of these speculators who are buying puts or buying calls might either be long stock or short stock. So they're long stock, they hope it's going to go up, but they're buying put contracts just in case the stock goes down. But they're only using a fraction of the money that it's costing them to hold the shares that they bought. They do believe in the long term the shares can do very well, but they are aware of the fact that between now and 4 o'clock today, there's a possibility that these shares might gyrate quite a bit. And if they go down significantly during the day sometime, the put contracts that they bought this morning or yesterday or a few days ago, they may rise dramatically in value as the shares drop dramatically in value. And so they don't want to sell the stock they have because they are long-term holders and there's no guarantee the stock's going to fluctuate all that much. But in case it does and it goes down a lot, the puts they bought are like a form of insurance, and they go up in value to offset the loss of the stock. And if they see the stock bottoming out at a certain price point, they may then sell these put contracts into the Chicago market at a nice profit, which will offset any losses they've experienced on the stock they're holding. That's all this is. Now, they may turn around immediately and go, okay, we sold the puts. We're going to buy a bunch of calls. We're going to buy a bunch of call contracts on the other side of this trade, because if the shares come back to the 190 range again tomorrow on Thursday or on next Monday or Tuesday, those call contracts will be worth a lot more money, and we'll make money on the upside, including the fact that our shares are going back up in value. That could well be the strategy going on here. And the same thing on the other side of the market. People are long the stock or short the stock. Let's say they've shorted it, and they're buying call contracts, out of the money call contracts, just in case the market goes parabolically crazy on them and the shares want to run to $280 a share in 2 days. They've got call contracts at maybe 200 or 210 that will be way in the money. They will make a lot of money on those call contracts, but that will offset all kinds of money they're losing on their short position. That is now really in trouble because the stock went up $80 on them. They're down $80 a share here, but they're up $80 a share or whatever it is on their call contracts. And they might actually have more call contracts in their hand representing more shares than they've shorted. They might be short 1 million shares or 100,000 shares, but they're long 500,000 shares in the form of call contracts. And so the amplification on the upside is much higher than what they're losing on the short position. They cash out a nice little hit there. They either buy more puts, they now take put position to go negative, or because the stock went up nicely, they're taking the gain, all the money that those contracts are worth, and they're shorting more shares at those higher prices. They're shorting more. Now they're averaging their short position between what they had and what they've done now to a level in the middle. And if the shares do back off and come back to where they were, they're ahead on their short position. This is always fluctuating. Billions of dollars in the market, trillions of dollars in the market. All stocks have short positions and long positions and call positions and put positions. And they're changing all the time. That's what makes this market what it is, a free trading market for individuals and institutional traders. And billions are won and lost every day on all kinds of stock. And you've got to decide what's your position in this whole deal. What is your thought, and why are you in, and what are you in for? What's the reason you bought stock? What's the reason you bought a contract? What's the reason you wrote a call contract? What's your reasoning? And are you prepared to either wait it out, just give it time? Can you handle the fluctuation of your investment up and down? Can you stand it? Can you handle days where the markets do not act like you thought they would, or they react to news that makes no sense whatsoever? Or can you tolerate politics getting in the middle of the markets from time to time, where some politician says something and the market goes up or down when it shouldn't have done anything? Can you handle that? The psychological warfare of the market. Can you tolerate it? Can you live with it? This is why in my profession, in my chosen profession way back when, I bought into the idea that I might need to be a motivator and a calm voice in a storm of crap, where I would talk down my brokers or talk down my clients and calm them down, and I would lift up my brokers or lift up my clients and keep them even keel through good and bad days, good and bad weeks, good and bad months, good and bad years. So many of you out there have no idea what a bad year is. You don't know what a real bad year in the market can be, and you've got to keep going into work, and you're going to work hoping you're not getting fired today, and you are on your best performance, and you're showing your bosses there's no need to worry about this guy in this cubicle. I'm an asset to the firm, and you have to prove yourself every hour of every day for a year, because all around you, you are seeing desks getting emptied out because people have been excused from further participation because they can't handle it, they can't take it, they're just not performing. That is when you earn your keep, and that's where managers look down and go, I see a future manager down there. That broker over there is going to get my job someday, because that individual and their tolerance and their ability to handle stress shows me that's a manager. That is an absolute winner, and we want to keep that person with us, because eventually that person's going to take over one of our branches, might take over this job. If I get a promotion to a senior VP position, that guy might take my desk. They see it. That's what management sees, and they figure out where the managers are coming from going forward 2 years from now, 4 years from now, 6 years from now, 8 years from now. That's how it goes. And sometimes certain people are management material, but they get stolen by another firm that also knows that too. And they go, yeah, that guy is ready for management now, but where he is or where she is, they won't be managers for 5 years because they don't have an opening for another 5 years because the management they have is young. But we need one now. We need a manager now. We're going to steal that guy or girl and bring him over here. And that's what happened with me. I was at one firm and I ended up going to another to become the manager over there. It's that way it works.